What's up everybody, welcome back to my channel. I'm Shawn, GILL CPA with Neutron Tax. Today we're going to quickly discuss an issue that most people don't touch on when it comes to LLCs and business bank accounts. And that's how commingling funds can actually pierce the corporate veil. Now what does that mean? So first let me define what commingling funds is. Commingling funds is essentially when you have a personal account and you have a business account and the money interacts too often and in inappropriate ways. An example of that would be, let's say you go to the store to buy your child a video game or something and you pay for it with your business debit card or your business credit card because you didn't have your personal card with you. So now you're taking a personal expense from the business account. If this happens once or twice, it's not a big deal. If it's constantly happening, you're commingling funds. Likewise, let's say you get a payment from your business or what should be made to your business from a client and you put it in your personal account instead of your business account because you needed to pay some bills. Well, that's not your money, that's your business's money. Should have gone to the business account, commingling funds. Now this can happen because people often are just not organized with their finances. They use their personal cards sometimes for business expenses and personal expenses, and they use their business card for personal expenses and business expenses. What this does is it creates a mess, right? And that's a mess on different levels. It's hard to keep track of expenses and income for tax purposes. It's hard to be organized. It's hard to know what's going on with your business. But in this specific issue, what it does is it pierces the corporate veil. Now what that means is that outside of taxes and accounting, let's say you got sued or audited or whatever it may be, the IRS or the other party that's involved in this dispute or transaction can look at that and say, okay, well, this person does not respect their legal entity, so why should we respect it? And one thing they'll go to do to prove that is they'll look at your commingled funds. They'll say, if this was a business and this entity, whatever LLC, let's say Shawn GILL LLC, is really a business, how come sometimes he's buying video games for his kid through the business? How come sometimes he's paying for supplies for the business through his personal account? He's clearly not respecting this LLC. It's there for namesake. It's just a paper entity. It doesn't exist in real life. It's just all made up. It's not really being run and operated the way it should be. So we don't need to respect it legally. And then you give up the legal protection that an LLC provides you. And the IRS can come and do the same thing. They can say, okay, well, you have an Scorp and that's supposed to be helping you lower taxes through various different things, but you kind of just take money out willy-nilly. You don't have payroll. You don't do this and that. You do certain stuff on your personal credit cards and your personal bank accounts. You're not respecting it, so why should we respect it and give you that preferential tax status? So they can go back on an audit and say this S-Corp is not real, it's just for show. And what this can do is essentially open you up to more liability, more taxes, and more risk. And it's something people don't think about when it comes to commingling funds. They think, oh, what's the big deal? Yeah, sometimes I pay this out of this card, sometimes I pay this out of that card. It's not a problem. It's annoying to organize it, but that's my accountant's job. It's not my job. It's not that big of a deal. But it can be the Achilles heel in your legal entity and in your tax dealings if it's ever examined. And of course, my job is to tell you things that you should be doing correctly, right? So you're not susceptible in these situations. So if you're in that situation, I encourage you to make sure you get your bookkeeping and your accounting and your cash management all figured out so that you're not using business money for personal things and personal money for business things, that you have those things separated and you respect those entities and that corporate veil. If you pierce that with commingling funds, then it opens up the rest of it to be pierced. If you're familiar with that term, piercing the corporate veil, which is ignoring the legal status of an entity and just kind of acting like it doesn't exist. If you pierce it with commingling funds, it's open to all other sorts of piercings. If you respect it with commingling funds, then it's more likely to be respected across the board. So that's my pro tip and educational moment for you guys today. If you have questions about LLCs, about taxes, or you need help setting up an LLC and optimizing it for taxes, you can schedule a call with me at the link in the description below. We'll talk directly about everything. It's a free consult. I can give you a quote for our fees and we can take it from there and make sure that you have everything set up correctly. Again, thank you for watching this video. If you enjoyed it, please subscribe to the channel, give it a thumbs up, leave a comment. I answer all your questions and I will see you in the next one. Peace. So that was the end of this video. If you liked it, please give it a thumbs up, subscribe, leave a comment. It helps me grow the channel. If you need help with your taxes, you can book a call with me directly at the link below in the description, and you can also sign up for our email list. We only send out an email about once a month, and that's everything I need to tell you. So I will see you guys in the next video. I'm out. Peace. Have a good day. Appreciate the views.